Hi, my name is Tony Quattroville and welcome to the latest How's the Market in 2014. Sydney saw a gain of 4.1% in dwelling values over the last 3 months and a 14.3% increase from this time in 2013, which is a slightly lower rate of growth when compared to earlier in the year. This is a sign that all markets cannot continue to rise in one straight line. Sydney's meteoric rise has seen house prices increase by a whopping 28.2% since the beginning of this growth phase in June 2012. This latest statistic validates what I always say to my clients. What looks expensive today is cheap tomorrow. If you bought a property a couple of years ago on the northern beaches, you are sitting on a very healthy capital gain in such a short period of time. Sydney's auction clearance rates still remain at record highs. 83% of the 253 homes listed for auction in the first weekend of October were sold, even though it was a holiday long weekend. This also marked 8 straight consecutive weeks of auction clearance rates above 80% in Sydney. Properties are still selling fast at a little over a month on the market, which is slightly faster than this time in 2013. But why has Sydney's market been so strong in comparison to the rest of Australia? What sets Sydney apart from the other states is its rate of population growth. Sydney's growth in population, apart from Melbourne, is on another level compared to the rest of the country. 25,000 new people were added to Sydney's population over the March quarter alone. They need somewhere to live. This, along with low interest rates, is encouraging more and more investors to buy real estate. Nearly 60% of all borrowing activity in Sydney is coming from investors who are capitalising on the longest consecutive period of no interest rate rises in over 10 years. However, the jury's out now as to whether the Sydney market is overvalued or even in a bubble that is about to burst. If you look at the property clock, Sydney is sitting at around 11 p.m. My guess is that if you are thinking of selling your property in Sydney, now or in the first quarter of next year is the time. Investors are starting to drop out of the market as yields start to decrease further. The northern beaches is starting to see rental yields fall under 4% because property values have risen so much higher than what rental values have. The other huge dent to any real estate market are higher interest rates, and although the RBA have not hinted at any interest rate rise soon, we can predict that sometime in the next 12 months they may be forced to take action. Interest rates cannot stay at these record lows forever. This will most likely be encouraged by employment rates. Keep an eye on unemployment. When the number of jobs available starts to rise, this will be the catalyst for interest rate rises to come. If you would like any other real estate assistance or advice, please do not hesitate to contact me. Thank you.